Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, June 23rd, 2011. This morning I'm talking about the Fed falters, and obviously there was the news yesterday at the FOMC meeting where Bernanke came out and essentially said that they weren't going to embark on any further easing, and that they lowered growth prospects and all this other stuff, which basically sent the markets reversing and careening lower. And I'm just looking here. Let me go to the 30-minute chart just to show you Euro. Euro is a great proxy for looking at the dollar, because you can see exactly how much it's come down, how much the dollar strengthened. But you can see here, okay, Euro started selling off yesterday at just about 44.40, which coincidentally was where I marked it as the high of the range in yesterday's blog, for those of you who read. Basically, we're seeing some dollar strength now because we don't have the added benefit of the Fed debasing the dollar any longer through quantitative easing. And I don't know if anybody watched this thing yesterday, but I'm starting to feel bad for Bernanke. I really am. I mean, he looked like a kid that just got told that there's no Santa Claus. When figuring out that all of these great things and all of these textbook maneuvers he's been pulling off haven't been working. All right, and we have a real problem in this country because right now all we're talking about is monetary policy. What's monetary policy doing? What's monetary policy doing? Meanwhile, politicians skate scot-free when we talk about fiscal policy. And as we know, there's a reason why we have both of these policies. That's how you manage an economy. All right? You can't have one policy which is bad, namely fiscal policy, all right, taking on too much debt, doing nothing about it, okay, while the other policy, monetary, is trying to tweak and shuck and jive and jerry-rig and fix the whole thing up just from that policy alone. It's not going to happen. All right, so that's what we're seeing here, and Bernanke admitted, all right, maybe there's some inflation, and there's still problems with unemployment and all these things, but I don't understand how he thinks he alone with monetary policy can fix these problems. Okay, he can't, and to think otherwise is foolish. All right, it's one thing to have a low interest rate environment, all right, to encourage business when times look good, but times don't look good. Okay, we have declining prices. Home prices, particularly, big problem. Home prices. No one's doing anything about it. Later this morning, we're going to get home sales coming out, and we're going to see how if anything's picked up there. But I highly doubt it at this point. I mean, I don't know who's willing to step into the market at this point to buy a home. Certainly isn't me. Especially now that we may potentially see rates go higher. Okay, now that Bernanke isn't buying up all of the treasuries that come to the market, who's going to buy them? All right, investors may demand higher yield, which could ostensibly push rates higher. All right, so we're not going to hear anything out of Bernanke for the rest of the summer, but come August, if it looks like things are deteriorating very quickly and rapidly, or if something happens with the Eurozone, then we could hear about further easing coming back into play. Right, the problem is that now these guys in Washington, they're done for the summer. Polish up the golf clubs, and that's really it. So we're in for what I'm guessing is going to be a sort of a rough patch here, because at this juncture it doesn't seem like anything is getting done. And if I were somebody who was in a position to hire people, I wouldn't be doing it, because I don't know what's going on. Okay, I don't know if these guys in Washington are going to be able to fix these problems. I don't know if they're going to fix them by saying, hey, you have to pay, X amount in taxes. Okay, I don't know if they're going to fix it by saying, all right, we'll just provide every employee with, this new healthcare system. I mean, who knows what's going on? Regulation. It's just a mess, is what it comes down to. But I really feel starting to feel bad for Bernanke, because he's doing what he can given the circumstances, but the deck's certainly stacked against him. So there we go. You can see Euro sold off. We had dollar strength. Okay, you can look at pound. Same deal with the pound. All right, we talked about the pound on Tuesdays. The pound was going lower. So there was another one for you. God, I'm just cherry picking these. You can see risk assets selling off here. Okay, Aussie a little bit as well, but still above 105. Don't forget, you get that interest rate differential there in Australia. Adding insult to injury in the Euro was just that their PMI figures came in lower than expected. All right, they were expecting a reading of 55.3. They got 54.2, which isn't a good number. So later this morning, we're going to get U.S. Home sales, but the big news out was basically this FOMC deal and what's happening there. the other thing going on is in Greece. You know, they're talking about now. Okay, they just had the confidence vote, but now they have to actually vote to accept the austerity measures and the sale of public assets in order to satisfy the creditors, namely IMF and ECB, to receive more bailout money. So that's not a done deal, as I've been saying for a while. So there's still some risk in the market coming from the Eurozone. All right. Economies look to be slowing around the globe. They lowered the growth forecasts here in the U.S. All right, and you got to remember that the Fed's forecasts are no better than anybody else's. We think GDP is going to be at 3.1. Yeah, well, guess what? They also said that unemployment was going to be, below 8% if we did this government stimulus, and if we have this quantitative easing, and guess what? It's not working. And the problem is that you can't just tell people something's going to happen and make it a self-fulfilling prophecy. You have to give people reasons to take a course of action. All right, and giving them a Band-Aid, and telling them to play Russian roulette isn't a good idea. All right, you may want to tell them, there's no bullets in the chamber before you do it. So, it's the kind of thing where we've really got structural issues. We really have problems with fiscal policy, and it's time we face the music. We have to come to grips with this if we want to get this country moving again, because otherwise, we're just going to be mired in stagflation. Well, maybe not even inflation. We may get dollar strength, which is going to bring down commodity prices, so at least you'll have cheap gas to drive to nowhere because nobody's hired you. But in any event, so we're looking at continued dollar strength so far today. Nothing really out there as far as big news that's going to help us. We've got the initial jobless claims coming out this morning. All right, they're expecting another 415,000 newly unemployed, and then we get the new home sales, which are expected to decline about 4%. That's a pretty low number, so we'll see what happens there. So that's what I'm looking at here today, folks. I'm not certain how ugly this is going to get, or if we have a chance to flip around. With all of the stuff going on with dollar strengthening and perhaps rates rising, all right, that could make bonds more attractive, but I highly doubt it at these levels. I mean, it would have to come up quite a bit to make bonds attractive. So stock market's still the only game in town, and maybe we'll see if the correlations can kind of hold up and keep some of these moves from derailing stocks. So that's what I'm looking at today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.